Why is China, the world's EV powerhouse, suddenly pulling back from Europe, a region desperate for clean energy solutions? Is this a strategic retreat or a sign of deeper challenges in the global EV market? What does this mean for Europe's climate ambitions and the future of sustainable transportation worldwide? China's electric vehicle industry has been a powerhouse thanks to new ideas, large-scale production, and strong government backing. In the past 10 years, Chinese automakers have not only dominated their home market, but they have also aggressively moved into other countries, including Europe, which is a key market for clean energy technology. But recent events show that China's plans to sell electric vehicles in Europe are slowing down a lot, which means they are changing their strategy. Why did they pull back, and what does this mean for the future of EVs around the world? China's goals for the European market. China's move into Europe wasn't an accident. It was a planned move to take advantage of an area that is pushing hard for sustainable transportation. The strict rules on emissions and high goals for EV usage in the European Union made it easy for new companies to enter the market, especially those that offered cheap EVs. Chinese companies like BYD, NIO, and Great Wall Motor tried to get a big piece of the market by offering low prices, using cutting-edge technology, and controlling the supply chain. In 2023, Chinese names only had a small share of the European electric vehicle market, about 2 to 5%. Even though this number was small, it was becoming a bigger danger to big names like Volkswagen, Stellantis, and Renault, especially in the cheap electric vehicle (EV) market. Why is China pulling back? What EU tariffs mean for your business? The European Union recently put tariffs on Chinese electric vehicles, EVs, that ranged from 7.8% to 35.3% because they thought the incentives were unfair. This decision came after an anti-subsidy investigation was started because European manufacturers were upset that Chinese rivals were undercutting them by using state-backed subsidies to get cheaper goods. The tariffs made it hard for Chinese companies to keep their prices competitive without losing a lot of money. In the US, similar measures totally blocked Chinese EVs with tariffs of 100%. But in Europe, they left the door open but raised the cost of entry. This changed the cost-benefit balance for many Chinese companies, which led to a strategic retreat. Difficulties of breaking into a market. In Europe, Chinese automakers ran into problems they didn't expect. Even though they sold EVs with lots of features at reasonable prices, they had trouble building brand recall and trust with customers. European buyers were hesitant to move to less well-known brands because they were used to well-known brands like BMW and Peugeot. Chinese manufacturers had a harder time getting a bigger share of the market because people were worried about dependability, after-sales service, and resale value. Tensions in geopolitics. The tense situation between China and Europe has made trade even more complicated. Concerns in Europe about the Chinese government's power, the transfer of technology, and human rights problems have made people less willing to buy goods from China. People see the EV tariffs as part of a larger effort to make Europe less reliant on Chinese manufacturing in many important fields, such as semiconductors and green energy, rising prices and pressures at home. What this means for Europe. Good news for French car makers. Chinese rivals are pulling back, which is good news for European manufacturers who have been having a hard time competing with cheap imports. Companies like Volkswagen and Renault can focus on regaining market share without having to worry about price wars when they have fewer competitors. However, this lower competition could slow down new ideas and keep prices high for consumers. EV prices are going up. European EV prices are expected to go up, especially in the budget segment, since there are fewer cheap options from Chinese brands. This could make people less likely to adopt, especially those with middle or low incomes. which could push back Europe's warming goals. Analysts say that the switch to electric vehicles needs to be fair for it to work, and the lack of cheap Chinese models could slow down progress. Effects on the environment. The tariffs have unexpected effects on climate goals as well. The EU risks a slower move away from cars with internal combustion engines by raising the prices of EVs, which could make people less likely to buy them. Building up the domestic EV industry might lead to more environmentally friendly behavior in the long run, but we can't ignore the current environmental costs. Better localization faster. Europe's choice to put tariffs on goods comes as part of a larger plan to make its supply chains more local and less dependent on imports from China. This could lead to more funding in making batteries, rare earths, and electric vehicles in the United States. The European Battery Alliance and other groups are trying to build an environment that can work on its own, but it's still hard to get to a point where everything is cost-effective and easy to use. Effects on people around the world. Turning attention to emerging markets. Chinese automakers are cutting back in Europe, but they are stepping up their efforts to grow in Southeast Asia, Africa, and Latin America, which are all new markets. There are fewer hurdles to entry, more demand, and less established competition in these areas. By focusing on these markets, China can make up for its losses in Europe and keep being the world leader in exporting electric vehicles. Strategies for the US and Canada. The US and Canada have taken even stricter steps than Europe. For example, they have put 100% tariffs on Chinese electric vehicles. This essentially stops imports from China, which forces companies to think about opening factories in North America. This could break up the global EV market, but it also shows how geopolitical competition affects choices about industrial policy. Leadership in technology. China is still the leader in many important EV technologies, especially when it comes to making and reusing batteries. Its smaller footprint in Europe may slow down innovation for a while, but the country's investments in research and development keep pushing the world forward. This could be a short-term loss or a chance for China to change its strategy, depending on how both sides respond to the new EV market. One thing that is certain is that the path toward electricity around the world is not yet complete. There are still many turns to come. Enjoyed this insight into China's EV market exit? Don't miss out on more deep dives into the latest global trends. Hit that subscribe button and turn on notifications so you're always ahead of the curve.